Testing 1, 2, 3.
Okay, we're good. Testing. Say something.
Testing.
Say something. Say something. Good morning, traders and investors. Welcome to Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel O'Connor and Dennis Dick. Thanks for joining us on this frigid Monday morning, at least where we are in Detroit. On today's show, got one guest for you, 8:35. Tommy Lackey in his new weekly spot, Mondays at 8:35. He'll be stopping by. It's been about a month since we've spoken to Tommy. He had a month off, so we're going to get some info out of him. He had a month to prepare for this appearance. Before we get to Tommy, though, we have a couple of very big ratings changes to discuss today, and of course we'll talk about, as much as I lament it, we'll have to discuss, even if it's just for a minute, the Dow on Friday, and Joel not hitting it down. But Joel, how was your weekend, and how are we doing on the S&Ps this morning?
Well, Spencer, we had a little fun at the Michigan-Maryland basketball game. Maryland pulled out a victory, so congratulations on that.
Thank you very much.
Pretty good weekend here, but let's get right into the markets and look at the S&P futures trading down $1.75. All-time high made on Friday, 22.77. All-time high close here at 71.50. We'll be keeping an eye on that as well. Friday's low way down at 58.25. Crude getting a little bit of a haircut here, trading down $1.08 here, trading 6 cents off the low. The low is 52.85, but crude has had a nice run, giving back a little bit today. And looking at the gold market here, gold's trading up 6.10 at 11.7950. Silver back in the mid $16 handle. So let's bring Dennis in. And Dennis, if you would have given me odds on that Dow bet, you would have actually won. Yeah, it was 0.37 it got to. Uh,
Hey Dennis, I'm gonna interrupt you. I'm gonna interrupt you for a second. We can't hear you, so not sure if what's going on your end, but we can hear you on our end. So and I don't know if there's a mute button there, but we'll try to work this out. It wouldn't be a Monday morning I've been thinking without the Monday morning gremlins, so I'm trying to figure this out. But in the meantime, let me just run through. We're going to start the day off by talking about a couple of notable ratings changes. So we have a few big ones this morning, both coming from Goldman Sachs that Dennis is watching this morning. We had Goldman Sachs downgrading Coke to a sell and downgrading Procter and Gamble to a sell, while also lowering their price target to $77. So Joel, give us some technicals on Coke and Procter and Gamble.
Big calls by Goldman Sachs here. Let's look first here at the Coca-Cola getting whacked in the pre-market. Trading lower. Last print here is 41.21. That is just off the low of the session here. The low of the pre-market session stands at 41.14. Trio of lows in this area, folks, so we'll keep an eye on the 4110, 4115 area. Let me give you some specific levels to keep an eye on here. All three lows, 4110, 4106. Let's see what happens. Maybe some paper here at 41. Also looking at Procter and Gamble here, trading down in the pre-market session as well. Let's pull up the Procter and Gamble chart. Procter & Gamble made a pre-market low at 83.80, hanging up here at $84. 83.50 is the level to keep an eye on.
All right, I just called Dennis back, so we'll see if he's there. Dennis, can you hear us? Fuck. All right, hold on 1 second, folks. I don't know what is going on this morning. We're having at some points the audio is working, some points the audio is not working, but it's working now. So I'm listening to the show while also talking, so I'm hearing myself in two different ears. So let's just keep rolling, and we'll figure this out on the fly. What's next? Well, keep going, keep going. I can hear you. Yep. All right. We're taking a break right now. We're gonna figure this out. So we'll be right back. All right, welcome back, traders and investors, to Benzinga's pre-market prep. We lost Dennis, but also Dennis was feeling a little bit under the weather today. Anyway, he doesn't really have a voice. He thinks he has the flu again, so we're just gonna kind of let Dennis drift off into the wind, and he'll listen to the show, and we'll go from there. So anyway, Joel, we talked about Procter and Gamble. Let's talk about the market on Friday. We were talking on the pre-market show about how the market just does not seem to mind of unfortunate events like we got on Friday.
Yeah, that's unfortunate. You're right. What happened in Fort Lauderdale. I actually was reading in Barron's over the weekend about how the market has been reacting to these kind of events, and it's instead of trepidation or nervousness, there's actually been solid buying going on during these kind of events. Those are things that are very unforeseen, and you cannot account what the market's going to do in these kind of situations. It was right near 20,000, and it did get knocked down a little bit from it, but it just looked like just one independent attack for now. I think at one point it looked like there was going to be there were more shootings going on. It looked like it was going to be a multiple situation, but at this time, you just have to keep an eye on what you're trading and let those circumstances not dictate what your trading plan is.
All right, Dennis wanted to bring it up. I really didn't, but let's bring it up anyway. Dow 2020. Joel, what happened on Friday? I mean,
Twat.
oh, sorry, 20,000. I said 2020. What? You couldn't buy one share of one Dow stock?
Looks like there was a lot of big sellers there. People had a target, psychologically. The S&P made a new high by quite a bit. So did the Dow. It's just a number, a close, something. It's just going to take a little bit more of a run. The backed off the close at 19,963.80 here. So getting a running start, only need a 37-point rally. Crude's down a little bit today, so might not do it, but big level. We'll be talking about it at least for another day.
And I do want to refresh everyone's memories who wasn't on. I don't remember what day it was last week, but we've had several rants now about this. Doesn't particularly matter for trading, just for general market confidence. But it's not something that I don't look at it. I know you don't look at it. I know Dennis doesn't look at it normally. So and then I was reading an old. Courtesy of Josh Brown, I was reading an old 1987 Wall Street Journal article about when the Dow broke 2,000, and that was, in 87? So, just something to keep in mind. Looks like we're going to have it on our radars, like you said, Joel, for another day, unfortunately. Let's do something we haven't done in a while, Joel. Let's run through the top 10, because we were talking about doing this anyway on the pre-market show. We haven't done this in a couple months, I think. So let's just go ahead and run through the top 10 components in the S&P. Let's get a quick reality check and see how they're doing as we kind of get into the start of earnings season. We'll have a couple of our companies reporting earnings later in the week. We're kind of going to get back into the swing of things here in 2017, so let's kind of run through and get a little bit of a primer for how we're doing in these top 10.
This is something that Dennis and I have been following for quite some time. Big fans of the S&P 500, also the futures. 10 stocks make up almost 20 if you include Google. 12 stocks or 11 stocks make up 23% of the index. So by keeping an eye on these top components, you get a pretty good feel for what the market's doing and the market's doing overall. I will just go through each component here, and I'll just Dennis doesn't like giving too many numbers here, so I'll just give one number on the upside and one number on the downside for each of these. The top component, see if everyone can guess what the top component in the S&P 500 index S&P 500 index is. And Spencer, you can guess too. What's the top component?
No, I should know. It's Apple. I know
yes,
this. It's
okay.
Apple.
All right.
It's been a while, but I still know that. It's Apple.
All right. On the upside here, Apple, we got up to 118 here, and this was back, I believe, in October. We made a high at 1869, and now we're kicking around in that 118 handle as well. Had a high on Friday at 1816. So let's keep an eye on 1869. That was your October high, and probably find some sellers all the way up to 120, big psychological number. On the downside here, we are trading in the green, so I'll keep an eye on the close, 117.91. That's probably your highest close since October as well. So there's a couple numbers there. In Apple,
I didn't see anything cool out of Apple last week out of CES, Consumer Electronics Expo. Was expecting product. You won't see any new Apple products there, but you'll see things that are related to Apple, and I didn't see anything that stuck out to me. So that's my Apple commentary for the day. Number 2, I'm gonna go ahead and guess Google?
Yep. Well, Google, it's a split company here, so the two Google and Google put together make it the second biggest component in the index. Google had a good day on Friday. We got back above 800. I'm looking at the Google as opposed to the Google. So you are looking here at Google. It's trading out 58 cents in the pre-market. That's not a whole lot here. The number on the upside for Google, let's just keep an eye on the all-time high, 816.68. If you're looking for a downside number, wow, it's a soft number here, but 806.15, that's the close. Haven't closed above 800 in quite some time. Let's move on to the third.
And it's been a while. Microsoft.
Oh, hey, getting hot there, Spencer.
Okay.
Microsoft.
I'm not looking.
Okay, Microsoft. MSFT all-time high 64.10 is the all-time high. You can see it hit $64 a couple times. On the downside, look at all those lows. It's 62. So we'll be keeping an eye on that 62 even dollar level. That's huge. Look at that. All those times were bounced. So 62, 64. That's your parameters there in Microsoft.
All right. Now I have to look because I don't know. ExxonMobil is next.
Okay, ExxonMobil, at one point, that was the top and then the second biggest component, but has lost a little bit of market cap. This was a little weak in a strong market. Last week, filled the gap here, $88. That was the low, actually $87.82. That was your low on Friday. Crude getting hit here, so it looks like we may have some more work to do on the downside. Let's see if we can get green for the session. You need to get above 88.50 here. Your two-day close at 88.55, so we'll keep an eye on the 88.50 level as resistance. If, in fact, you can't hold 88 for you shorter-term traders, you had a low at 87.65 on December 8th.
And then next, now I'm looking, I got it on my screen, Johnson & Johnson.
Johnson & Johnson here, J&J, trading up 6 cents. We'll see if there's a little pressure on your Johnson & Johnson, your high-yielding stocks. Coke and Procter & Gamble getting downgraded to sell at Goldman Sachs today. Look at this sleeping giant here in J&J. This is going to be an easy one to do the technicals on because we have really been consolidating between 115 and 117. This is going back all the way to December 23rd. So I'm keeping an eye on those two levels. Break down below 115 and just someone's really making a stand at 117. Even above that, 117.30. That was your high on December 14th. That was your high since you had the 109.32 low back on December 7th.
Did you read your Barron's this weekend, Joel?
I read it online, which I hate to do.
Yeah, I know.
Because it didn't get into my mailbox.
Okay. Well, next stock here is Amazon, and I bring up Barron's because they got a nice, the interesting story of the weekend there in Barron's about the bookstore battle that's gearing up between Barnes & Noble and Amazon. Actually, Barron's likes Barnes & Noble with its low valuation and 5.5% yield, despite the fact that Amazon's now opening up a brick and mortar store in New York. Obviously, they're a giant in whatever they do, but Barron's likes Barnes & Noble. Let's look at Amazon though, and they're still Amazon. And let's look at how they've done this week, because we were going to talk about the Amazon anyway. And they're a beast.
Look what happened. You had Macy's and Kohl's basically, coming out with lower projections. People are buying things online. They're not going into the stores here. So, you get a boost. You get a boost in Amazon. You did get a trade here. Oh, did you get over 800? Nope, 799.44. That was your high on Friday. Sold off a little bit near the end of the day. That 800 seems to be the roadblock for now. Let's see here. We did test that 800, went to 800.84 in November. So 800, huge psychological level. All-time high is way up at 847.21 here. So see if we can clear 800 and make another run for that all-time high. Great week for Amazon, though, last week. It began. Let's see, what did we do on the weekly chart? It began last week at 749.87, ended the week up at 795.99. Good move for Amazon last week on the heels of bad news from Macy's and Kohl's.
Let's just run through. We're almost done now. Berkshire Hathaway, they're not really a.
Yeah, holding company
Yeah.
here, BRK/B. Let's take a look. Bunching up too. Consolidation here. All-time high 167 and a quarter. Flat in the pre-market session. I'll just give you the consolidation here, and this consolidation has been holding since December 29th. The low of this consolidation 162.18. The high 164.71. So basically a little over a 2-point range over the last week. We'll see if we can bust down through 162 or break out above 164.
Next one will be interesting. J.P. Morgan. And when do they report? I know it's coming up.
Friday. Yeah.
Okay.
And would like to talk to Dennis about moves in stocks kind of like ahead of earnings here. But maybe we can do that with him tomorrow. All-time high in J.P. Morgan is 87.76. On the downside here, $85 has been holding on. Now it's just a question on the J.P. Morgan. Do you want to book any profits here ahead of the report? I know it's an extremely volatile stock when the reports come out, but since the election, you've moved up from the $70 area, new all-time high at 87.76. I wouldn't be surprised to see some offers in there and people just trying to book some profits ahead of the report. One interesting note on this, you've had since making that all-time high at 87.76, you've made 3 higher lows. So step down sellers here in J.P. Morgan. Calling 85 even, 85.04. 04 was low on the 29th. That's support you need to hold. Currently trading 90 cents above that.
J.P. Morgan is not the only bank to report Friday. We got a couple reporting Friday.
JP,
right?
yeah. Why don't we just go ahead and take a look at those?
Yeah, I'm gonna pull them up right now. Hold on one
JP
second.
Morgan. You also got Wells Fargo. Whatever happened? Was there bad news about Wells Fargo? I don't even remember.
Very funny.
Look at that. Sold off to 43.55. All forgotten now on the fake accounts. 58.02. If you're looking at Wells Fargo, you want to keep an eye on the $54 level. That's been holding up as support here. Oh, boy, going all the way back to when did you have your first 54 even low? That was on December 5th, low at 53.87. So 54 has been your buyers. 56 has been your sellers here. You can see over that same time period, sellers in the lower 56 handle, perfect double top at 56.35, 56.31.
Moving back now to the top 10 in the S&P 500. Facebook, Mr. Bookie, Mr. Zuckerberg.
Facebook has been on a nice roll. 4 straight solid up days last week. I think ratings land must have helped that a little bit here. Trading down just a nickel in the pre-market. 125. That's a target. That'd be an area to look at. You gap down. I can remember this. This was off the Q3 earnings. Moved around quite a bit, but 125. Then you start to fill the gap from the earnings play. So 4 straight up days in Facebook. I'm calling the resistance here, short-term resistance at Facebook at that high. What was it exactly? 125 here. Let me take a quick look to see when you get into the gap area. That exact high was 124.61. In order to fill the gap from the earnings report, 26.28.
2 big stories that I'm watching in Facebook now and honestly for the rest of the year and going forward. One is the whole fake news thing. If you're someone that follows that, it may not be tangible to the stock yet. but it has the potential to really damage Facebook's credibility, and I could even argue their bottom line in the future. Their lack of control over what goes on their platform. One thing that happened last week is they finally hired someone to lead their what they call their news partnerships team, and they hired a veteran TV journalist. And they were trying to get a handle on the fake news, made up, viral clickbait content that depending on your political leanings, whether you're one way or the other, it doesn't really matter. A lot of fake nonsense gets played up very nicely due to Facebook's algorithms and gets shared a lot, and they've had obviously a hard time controlling that hate speech too. So they're trying to get a handle on that. So they didn't make a one big hire. They're really making an effort now. Looks like to stem the tide with the fake news thing. That's story one. Story two is Snapchat, and the Snap Inc. IPO will be this year. We know that Facebook owns Instagram. Instagram has recently launched some very similar functionality to what Snapchat does in terms of picture taking, temporary pictures, and all that jazz, and sending pictures and communicating through messages that way. I think I'm going to be watching the Snapping IPO very closely, especially as it relates to Facebook. There's obviously been rumors in the past about Facebook trying to buy Snap, so we'll see what happens there. A story actually last week about Snapchat maybe inflating their numbers, Facebook type story there. But the Snapchat IPO and how it relates to Facebook is what I will be really, really interested in this year, and see how one affects the other.
All right. I mean, yeah, there are different things and there are different theories going on, but one thing is price, and price don't lie. Here, you got an earnings report coming up in Facebook. You can have your opinions as far as what's it doing. As far as right now, it's a hot stock on Wall Street, making a march towards that all-time high of 133.50. And let me see if I could. When their earnings report comes out, I think they're a little bit later in the quarter.
I think they're in February.
Yeah, let's
without even looking.
February 1st.
Okay.
Very good, Spencer.
Thank you. All right, moving on now. That was my sort of. But anyway, the point here is keep an eye on the Snap IPO. It'll be the biggest IPO of the year, probably, maybe. It's my opinion. But check that out, and I would watch Facebook very closely. We know that they paid a lot of money for Instagram, and it's a very, very similar product to what Snapchat does. So I would watch that going forward. Keeping on the list now, General Electric.
GE had a nice run up, running into problems. You snuck above 32 here, but it seems like someone is making, more than someone, institutions here, making a stand at the $32 level. GE reports fairly early into the quarter. I think they'll be next week. I'll just give you a level to keep an eye on. 31.83 to 31, just call it 32 even. You've had, I don't know, almost a half a dozen highs in that area. Recent high of the move has been 32.38, but right now ahead of earnings here. A lot of sellers up here, so I wouldn't be getting too excited until this thing can bust above 32 and get a couple more closes. High close the move has been 32.13.
Last one, AT&T, and I do want to say, mark your calendar, folks, for February 15th. According to a filing, that will be the day that the shareholders, a special meeting of shareholders of Time Warner, will meet at the CNN Center in Atlanta as far as this Time Warner AT&T merger, and whether it may or may not go down, we're still not really sure. But February 15th is a special shareholder meeting. So that's the day to keep an eye on. But AT&T is the final of our top 10 components in the S&P 500. How are we looking in that stock?
Well, Dennis and I talked about this one on Thursday. It was going ex-dividend. I'm sure, I don't know if we got to talk about it enough on the show. But going into ex-dividend, you have to take a choice. Hey, is it worth taking that dividend, that 40-cent dividend, or do I want to sell the stock ahead and not worry about it and recoup at a lower price? Now, $43. It hit a major resistance level there. I know Dennis shorted a little bit on Friday. I bought a few puts. Didn't really think it would go all the way down to the lower $41 handle. The adjusted close on AT&T and Friday, I believe, was $42.19, and never even saw that level. Opened up at 42, went straight down. So, man, I'd have to say that your low that you had at 40.85 to 93, let's call $41 next support level. But let's see if it can get a little bounce. Only trading up a penny here. Incredible run, though, from 36 to 43. That's a 7-point move. 3.5 that, 39.5 to $40 area. So just remember, the stock just paid its dividend. So nice dividend run up there. We've talked about that play before. Same thing with Verizon. Got over $54 and opened lower. Never filled that gap. So we'll talk about that more some later shows, but nice run up into the dividend. Looks like some people decided to exit the stock instead of holding on for that dividend, or after the dividend was paid and they had the stock on the run up, they didn't mind giving up a few pennies and exited the position.
By Apple in the chat asking if anyone is long ARIA, that would be Ariad Pharmaceuticals. They just got taken over just this morning there by Takeda for $24 per share. Yep.
Wow. And it's trading. Is it halted or is it trading here?
Shares were halted at $7.55. I don't think they've resumed yet.
All right. Well, we'll see what happens when they resume. Of course, you could always hope for a potential suitor coming in at a higher price. Not real familiar with this stock, but what we've seen in mergers and acquisitions here over last 6 months, a year and a half, is a lot of time that premium price comes out right when things are announced. I believe with the Marriott Starwood, you did have Angbang come in there and bid the thing up and make Marriott pay a much higher price. But $24, you took this home long, $24.02. We'll see if it gets above that takeout price.
And who was it in the chat? Trade Fox asking about ETRM. This was a fun one to watch on Friday. Interomedics, if you were paying attention, it was spiking up, and had a little bit of a spike down, but pretty volatile Friday. Closed Friday at, now I'm looking at 3 different charts. What did it close Friday at ETRM?
Friday it closed at 9.19 here. Nice 2-day move in this one. We talk about continuation moves. Went from 209 to 397 on Thursday, and then all the way to 397 to 919 on Friday. Trading above that level right now. Pre-market high is over $11. Pre-market high is $11.42. Some good volume being associated with that rally. Stock had been real quiet. This is a reverse splitter too, folks. So if you want to make any comparisons to these, to the dry ships or whatnot, all-time high 67,851. So maybe a little bit of a short squeeze. Not sure what the news was associated with ETRM.
The news on Friday, well, there wasn't really, but they just this morning they filed to sell 605,000 Class A units at $3.97 per unit. So that's the headline this morning. Now it's spiking down just as we talk about it. But go figure. All right, 8:34. Let's take a quick break and let's go grab Tommy Lackey. He is the managing partner and portfolio manager at Relativity Capital Advisors. It's been quite a while since we've spoken to Tommy on the show. He had about a month to prepare, and he was off for the new year and not following the markets. I don't think as closely, but he's back now. So let's go grab Tommy, and we'll be right back with him.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you you need thinkorswim. To experience everything thinkorswim has to offer, open a TD Ameritrade account today. thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elkanah, along with Dennis Dick and Spencer Israel. We have Tommy Lackey on the line, managing partner and portfolio manager at Relativity Capital Advisors. Haven't spoken to you in a few weeks, Tommy. Happy New Year, and how are things going?
Things are going great. Happy New Year to everybody out there, too. Yeah, I was actually engaged. I just wasn't doing a lot of my scans and things like that, so I didn't want to come to you guys unprepared.
All right. That's the kind of guest we like to have on our show. Let's just talk about the general markets here. Dow 20,000. Was that your sell order up there that prevented us from hitting that milestone?
That was pretty funny to see how close and see that go, and everybody just still sitting right there. Again, I made a comment on Twitter or retweeted someone saying Friday that, NDX 5,000 was much more important than the Dow 20,000 in my view. And so the fact that we saw the NASDAQ move over some milestones, I think, was a much more important factor for real investors, in my opinion, to be paying attention to.
Yeah, I think we kind of have the same sentiment here as we like to follow the S&P and the Russell, a lot of other indexes. I think our main beef is just the way the components have changed over the years. It being price weighted, you take out your Bethlehem Steel, you take out, I don't know who else was in there that has been taken out, Tommy. You put in your Goldman Sachs, you have your price weighted issues. Much different circumstances.
Sure, it's much more traditional than it is functional, and I think that's how people should look at it.
All right, so let's get right to it here, and your opinion here as far as the market hitting this milestone. I mean, are you looking for what kind of technical pattern here are you looking for to tell you, okay, maybe the inauguration's the top, maybe this Trump rally is a little overdone? What specifically are you looking for in your charts to let us know that perhaps we've hit an intermediate top?
Price action, and we just haven't had that yet. I mean, pretty much all we've seen so far is sideways moves off the highs that pretty much let all the momentum indicators come out of their excess, if you want to call it that. The idea of selling just because something's overbought, in my opinion, is a short-sighted scenario if price doesn't follow, and price hasn't followed yet. The one big down day we had at the end of the year with NASDAQ 100 immediately got eaten up this year and has already moved to new highs, and actually moved to new highs first, which is a great sign. It means the appetite's still there. So I think there's a lot of strength out there on the overall markets, and I think you also that they're not particularly overbought at this point. And then you look to the next scenario and say, okay, do I have internal holdings and do I have good setups that I'm seeing? And they're all over the place. I mean, especially if you like flags. It doesn't mean they won't break down. You still watch tight consolidations on both sides, but it definitely favors the previous trend.
All right, let's move on here to your nitrous scan, and boy, this is looking a little littered here, Tommy. Well, no, I guess you do have some in the meltdown as well, but the top stock here on your nitrous scan is United Technologies, UTX, and breaking higher. Tell us what you're seeing in the technicals in UTX.
Yeah, UTX is just basically moving out of a daily consolidation here. On balance volume making new highs as it does it. All the moving averages are moving higher along with it. And it's just got a tremendous amount of bullish call flow in there as well. Especially one that caught my eye was you have over 10,000 in the January 115 call OI right now. And at 4,500 of those were in one trade back on 12/9. So there are people still engaged here thinking this can move higher. You might not want to jump in and bet on those calls, particularly with this shorter time period, but it gives you some gauge and idea of what's out there.
And we were talking. That was a little subject of debate that we had with Dennis back in December. Have you been doing anything tracking these this way, to see how they play out in the marketplace? I know there was a big trade in Lululemon at the end of the year, and lo and behold, who was it? Bluefin came out and said that they were a great retailer and sold off and made a nice move here. You've been doing any kind of official tracking to see how these big option trades play out in the marketplace, 2 days, 3 days, a month afterwards?
Well, that's exactly what Joe does that I work with, and that's his entire setup. Is he puts together fundamentals, technicals, and options flow on top of those two to show when people are entering. In fact, we talked about this in December after that discussion with Dennis. Basically, again, don't forget that everybody is whining so much about how every time the markets rally now, volume drops, and the volume's just not there anymore. And I even said I don't use volume. Well, guess where the volume has moved to? The options market.
Interesting point.
And so if you can read that market right, which is hard to do because some are bought, some are sold, some are open, some are closed. So if you can read it right and learn to read it right, it really is a huge, huge leg up. And actually, I mentioned earlier in the chat that you can actually see how we do this in our firm if you follow Relativity Cap on Twitter, because we are now starting to put up some of our setups that show all three of those prongs, the fundamentals, the technicals, and the options flow, and show kind of how they all line up with securities. And we're doing this, we're putting these out there before the expected moves.
And we're
not going to.
What's that Twitter handle there?
It's Relativity Cap, just the first name Relativity and then CAP. And, we're not putting out 100 a day, but they're ideas that we have, and these are before we ever decide whether we're going to take them or not. So this is before they go.
Should I
this isn't a armchair quarterback type thing.
Should I delete Trump and put Relativity Cap on my Twitter feed?
Oh, no one can delete Trump. That's too entertaining.
Okay. Next on the nitrous scan, EXC. Great looking chart. Why, Tommy? EXC.
EXC, I really like the way it's moved up here in this flagging above the previous breakout level instead of moving back down below it. And now it looks like it wants to move higher. Now, the only thing I did put here is that I was a little bit concerned that recently there's been more put buying in here. And I just want to make sure that if you go into something like this, you're pretty tight on this one. Or this could be one of those look both ways plays, as I talked about before. If you use options, you could use a straddle or a strangle or different variations of that sort if you're not sure. But just make sure it gets through these tails up here. And then once it does, I think it's got some room it can move.
All right, I do see that consolidation pattern here. Let's see if we can break above that area. Next on the nitrous scan, you want to talk about a nice chart and nice NICE breaking higher out of a long daily. Tell us what you like in NICE.
Yeah, this is one of, as I keep mentioning, this is one of Joe's top plays for the year. Since he does a lot of that fundamental research, thinks it's a great play. And if you look at this chart, the daily chart looks like it's just about to head out the top of the consolidation. And then you back off to the weekly chart and realize how big this consolidation really is. It goes to basically April, May of 2015. And so a huge base here it wants to move out of. It's got a good volume footprint, on balance volumes moving higher on this one as well.
Next on the nitrous scan, AAT. Now, this is interesting because this is a REIT here, and we had Goldman Sachs downgrading Procter and Gamble and Coca-Cola today. Fear of interest rates going up, people abandoning the REITs. But Tom, you're just looking at the chart, and what is the chart? Ooh, look at that set up here. What's that? Just above $44.
Yep. And chart people are not abandoning the REITs. That's one of the things I think people are mistaking is if you look at it, they're abandoning the defensive plays like utilities and consumer staples, but REITs have actually held up if you look at IYR or SCHH, which are two ETFs there. And then if you really want to get REITs with a pretty good some oomph behind them with interest rates potentially going up, look at REM or MORT, which are the ones that are the mortgage-backed REITs. So there are plays inside that if you're worried about the overall interest rates going higher, but it looks like these are holding up rather well in the face of bad news, which we all know what that can mean.
What do you think? Why do you think that these REITs are kind of immune to to the sell-off here?
Well, you have a trade-off. One of the other things we've had a lot of problems with REITs in over the last 5 to 10 years is there was a lot of overbuilding before the crisis in 2006, 2007, 2008, so a lot of empty space. Well, if the economy really is getting better and getting stronger, that's a lot of empty space that can fill up. So even if interest rates go higher, depending on how they're financed, they still might be able to get occupancy rates up high enough to outperform that drag.
Wow, nice explanation there. Moving on here on the NitroScan, SAP picking up some volume as it heads out of consolidation. What do you like in SAP?
Yeah, SAP might be, for some people it might be a little extended because it's 3 days in a row. So you might be able to go straight at this one, but you've got a moving average cluster right below at 87. So you watch this and see if it either can move higher from here, and again, over Friday's highs, a short-term trader could try it. Or you could let it pull back a little bit in that 87 level and see if you can get you a good short-term level to trade against.
All right, Rob Hood is asking if you can review WMGI, price on balance volume and price volume bar in favor of a move higher. WMGI, we're throwing one at you here, Tommy.
Yeah, Rob's exactly right, as usual. The weekly chart looks really good in RSI bull range, turning up above 50. Nice little flag / consolidation with a little bit of a shakeout there right in the middle in 1st of November. And now it's moving back above both the daily cloud as well as all the important moving averages. And as Rob said, the unbalanced volume is heading out highs as well. You're also about to see your daily RSI move back over 60 after moving sideways for 2 months. So you've got a lot of good things here if it can break above this level. But as Rob, I'm sure, knows, it's got to break above this probably 24 and change level and hold it for half an hour or so, just this slight downtrend line off the highs.
Is that an Ichimoku cloud?
Yes.
I could say it. I don't know exactly what it is. All right. ACAD breaking out after holding gain on good data. ACAD, give us your technical thoughts on that.
ACAD had some good data a couple weeks ago. It surged higher. And then it's been a top pick by some of the different firms as far as for 2017 for the potential, I believe, of M&A. Don't hold me to that one. Definitely do your due diligence on that one. But I know it's been up in some of the news, and it's coming off those lows pretty well, above all the important moving averages. And if it can get above 33, I think it starts heading up towards that 36 level, and then see if it can get beyond it. If you flip back to a weekly chart, you can see right here that it's breaking out of a big downtrend off the highs as well after making a higher low in late October.
Downward Dog is in with its stock today. VFC, I believe that is VFC Corp. Do you want to take a look at that one on your charts?
Sure.
VF Corp. Oh, been selling off
Yeah,
here. Go ahead, Tommy.
It was actually, I believe, if I'm correct, I think it might have been on my meltdown scan. I might just not have put it on here. But, yeah, it's sitting right on that 5250 level. If it heads back below that level, it's got some room down. Now, on the other side of that, if someone wanted to play this to the upside, I probably wouldn't be looking at anything until it got and held over 54.
Yeah, see, I mean, you're looking at this trade here. Hey, you're taking a shot at 53.18. Certainly don't want to see a new low of the move. That's 51.76, kind of long consolidation period here, but see if we can hold the low of the move. The final one on the nitrous scan, Caesar, breaking out with some volume and a nice short float. Let's talk about CZR.
Yeah, this is a small casino operator, gaming. It's not ones in the headlines like Las Vegas Sands or Wynn or any of those, and so it kind of stays out. So it has not really picked up some of the moves the other ones have yet, but it does look like it's starting to move out now on balance volumes, moving to a 4-month high. And like I said, the short flow is up around 11% on this one. Now it's got a gap up around 950, but even that's still 6 or 7% from here. But if it can get up into that, I think the 11 range is where you're going to see your biggest resistance here. It's kind of the top of this little base where those tails are. Short-term trader trade still there. Long-term trader, if it can get over that, it's got some room all the way up to 15 or 16.
All right, let's just do a couple on the meltdown here, and then we'll let you go. BBY, gap below, calling it retail update, likely the catalyst. BBY, what are you looking at in Best Buy?
Yeah, Best Buy looks like it wants to close that gap down there off the breakout. But again, after Christmas and all that, we're going to start hearing more of the news about how well they did over the holiday season and all that. And so that could be a catalyst either way. The flow, the option flow to me looks bearish. But in just a short discussion with Joe, he said there's really been flow on both sides. So you're really going to have to wait and see that catalyst and see how see which way it moves this one. So I'd definitely say this is probably a look both ways play.
All right, and downside here when we talked about AT&T just going ex-dividend here. Nice run up ahead of the dividend. What are you looking at in AT&T?
Yeah, AT&T is a scenario to where I think that if it gets down below that 41 level, it could easily move down to, say, 30, 38-ish, maybe even the 36 range, which is the lows of this. We trace this whole move. And that's one that I do believe is more susceptible to the interest rate plays and all that, at least in the short term. Now, in the long term, if they continue to expand the way they are, they might be able to look more media company versus old style telecom dividend play. But I think for the short term, they're still going to be a recipient of that mentality.
Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. Thanks a lot, Tommy. We'll speak to you again next Monday.
Thanks, guys. Hope you'll have a great week.
All right, 852. S&Ps have made a new low for the session here at 22.68, trading down 350. Crude unable to recoup the $53 level, and gold continues higher, up $8. Silver,
I'm sorry. Keep going.
silver at the high of the session as well, up almost 10 cents at 16.61.
I wanted to discuss some biotech stocks because today is the start of the J.P. Morgan Healthcare Conference, and this is there are many healthcare conferences throughout the year. This is the one that tends to be the most influential. Adam Feuerstein on the Street had a great preview of this story of this conference last week and the stories that could come of it. And I want to look at some stocks. By the way, Dennis, are you with us?
I'm here. Can you hear me?
Let's find out.
Oh, yeah. Well, loud and clear, Dennis. We see the big bar going up there.
What stocks? What stock biotechs did you want to look at?
All right. Well, let's talk about Celgene. Let's start off with.
Celgene's been one of the best to breed. I mean, when you talk about the biotechs, and obviously, biotechs did not have a good 2016, but really when you analyze Celgene from a technical perspective, it has held up better than most of the other biotechs. We're talking about a stock that is only 20 points off its all-time high. And you can say 20 points, but $140 stock, $120 stock, it's held up very well when you consider a lot of other biotechs are significantly off the highs. Another thing is it sets up well. It's starting to look like it wants to go, doesn't it, Joel?
Yeah, look at that 120 level. That's just the weekly chart here. Been keeping a lid on it for quite some time here. I mean, you get pop. Certain things are said at these events. I like the setup here above 120 here in Celgene.
I do too.
Yeah, long consolidation period. You talk about whole numbers coming into play. This is basis a weekly chart. Look how many times you got a shot to buy that at 100. Nice even number. wasn't quite former resistance, but there you go. Let's see if it can clear 120. And I'll be keeping an eye on the IBB just for a general take on the market. That 300, this is basis a weekly chart here. There's your breakout above 300. Forming great support above the low of the move here and lower 260s. I guess I just see what the Trumpster has to say about the biotech sector and drugs is probably why some people are really piling into this.
Also, I'm sorry, Dennis.
No, I was going to change the subject, so keep going.
Okay. Well, Gilead Sciences, right? It's the only large cap biotech company projected to have negative earnings growth and revenue growth in 2017. They hired a big exec from Novartis to run their hematology and oncology business. So I guess the question still is, will they buy anybody? But let's talk about Gilead Sciences and the quote-unquote
Growth has
Apple.
been the issue here. That is the issue for the stocks. Why it's trading with a multiple of 6 or 7, I think, going forward here. So obviously, they're looking, to try to pick up growth somewhere. Maybe they do buy somebody. Maybe they try to do it in some other ways. But that's been the issue here with Gilead. Obviously, I own this. I've talked about this one. I own this in my invest portfolio. I think long-term Gilead's going to figure this out. I like the value here. I think there's good value at 2.47% dividend too. I get paid to wait.
Yeah, $70. I mean, long consolidation here. This is basis the weekly chart. Let's hone in on the daily, get a little more information, and on the daily chart here, let's keep an eye. We got a triple top here. Let's give you those exact levels for those looking by Gilead on a breakout. Not quite a perfect triple top here. 77, 76.98. It's been the high of the move. 76.85. That was your high on Thursday, and 76.50. So a little bit of a step down seller here. Really need to clear 77. Had a nice move though. Do we have some good drug news on this last week? Because I see a $3 move.
No, they were moving. They were moving last week with those big moves early in the week. You saw a lot of biotechs really catch a bit early last week, and then a couple days of consolidation. But I mean, you look at the IBB; it coincides nicely with that, where you had a 5-point move up. I think it was a Tuesday trade, and then on Wednesday trade, we're up another 10 points on the IBB. So biotechs just caught a bit early 2017. That's your classic January effect. Dogs of 2016 often do start to catch a bit early 2017. Is exactly what we saw. So if you're playing those seasonality plays and you're looking at your calendar, you were rewarded with that biotech move early on Monday or early on Tuesday and Wednesday.
Biogen resistance just under the $300 level.
Gilead's CEO John Milligan will be giving a overview of the company at 10:30 a.m. Pacific time, so 1:30 Eastern today. I also want to talk about Sarepta. Sarepta CEO Edward Kay will give a keynote at 7:30 a.m. so 10 Pacific, so 10:30 a.m. Eastern tomorrow morning. I guess the big question is edapersen and how many people are buying that drug, and are they getting it, reimbursed?
I'll be interested to hear what he has to say too. Obviously, I took a position in this in my investment portfolio there. A little bit of a speculative play. I like to have some smaller biotech stocks for the spec, and like I said before, I liked it just because this is where the area it came from when the drug obviously got approval. So it came all the way back in from that 60 down to the 30. I was a little bit early buying it at 30. It obviously went down to $27. It's back up here at 30 now, so I'll be interested in what they have to say.
Yeah, I mean 63, 73, and then it just was kind of like Chinese water torture here on the way down. Just trickled down at a $30 level. I kind of like this one too, Dennis. I mean, do you ever expect these guys to say something bad at these conferences? I mean, I guess it does.
Sometimes it does happen. Like, I mean, with growth rates and different things, I don't think they sugarcoat it as much. So you do see it happen. But obviously, if you're talking about, you're only going to try to find the positives in everything.
Right, so keep your eye. Benzinga Pro will be giving updates from that conference as well.
Let's get a feel for today. I mean, we got 1 minute here left, and, obviously we're looking at a lot of different stocks, but if you want to give that one more, we can go a few minutes late, but there's a lot happening in this market right now that I'd like to talk about.
Sure, go ahead.
Spencer, what I really want to focus here on is this looks like a nothing day. You look coming here, you see S&P futures down 3. Oh, we're bored. We don't have that much to talk about. It's not the case at all here. This day is separating here right now. This is starting to look like a risk-off day big time to me. I'm seeing the financials absolutely get wasted here in the last half an hour. And, wasted is relative because we haven't had big moves here. But when I see JP Morgan down almost 1% now, Citigroup down here almost 1%, Bank of America down almost 1% in the pre-market, it's starting to show that, hey, this is starting to look like a risk-off day. Goldman Sachs down $1.40 in the pre-market. When the S&Ps are only down 3 and you're starting to see clear separation like that, it's telling me that, hey, people, there's going to be maybe a little bit of follow-through selling from, we got the Dow 20,000 or almost Dow 20,000, and then we didn't quite get there. And now maybe people are having a second guess here because they're coming in on the risk assets and they're hitting them. I mean, oil is getting hit hard here today. We are down on the USO. If we look, we're down 1.2%. A lot of your oil stocks are going to be in the red. And, with the financials leading the charge down, 2 European banks are trading down over 2% here in the pre-market. It's a sleepy little ugly Monday.
And, also just regarding those financials, and we talked about this at the top of the show. I mean, let's say you're sitting on JP Morgan going into this report on Friday. I mean, you are sitting on a lot of profits here, right? And good report, bad report, very high expectations. They're going to have to absolutely blow it away here, right? I mean, even if they have a good report, they beat. I mean, if it's not by a lot or, they don't really give guidance, do they? JP Morgan, but I just think it's just a case of, run up, consolidation, run up, consolidation, run up, consolidation here. Eventually, these consolidations are resolved to the downside here. So.
These stocks are priced. You're making a good point. The stocks are priced not for perfection, but they've got to beat. I mean, they come out, on Friday, JP Morgan, Wells Fargo, both reporting. If they come out, and say anything somewhat disappointing, you're right, a lot of people sitting on a lot of money, and there could be some profit taking there. I'm not sure if you got some nervous Nellies here this morning. I think today's sell-off is just more related to maybe a little bit of, over the weekend. Oh, well, if we didn't get to Dow 20,000, I take it a little bit off the table just in case we don't get there. A little bit of psychological there. But, you can't argue. We don't know always the reasons behind, whatever selling pressure we see. I just, have my screens and sectors. And sometimes, usually on a day that we're down like 2 or 3 S&P futures, it's hard to get a feel. It's hard to get, whether, this is risk on, risk off. It's like there's nothing going on. But, today, like I said, I'm seeing clear separation here. I'm seeing risk on assets getting hit, and I'm seeing, defensive stocks getting bought. Look at the TLT here this morning. It is trading up over $1 in the pre-market. That means stocks like your Johnson & Johnson's, Procter & Gamble and Coke are going to be weaker today because of the downgrade from Goldman Sachs. But a lot of your other, your utility stocks, think about those. Those might actually catch a bid here today. Because usually when the financials go in one direction, you see stocks like your utilities, your defensives, your REITs go in the opposite way. And with the TLT trading up as much as it is, it makes me think that they might jump into some of those yield plays here today. So set up for today. At least for the morning, it looks like that they're going to be putting a little bit of pressure on maybe the financials, and, they might be potentially buying some of the yield plays.
All right, 9:02, we went a few minutes over. Dennis, I'm glad we got you back for that last second recap here. We'll go to Spencer, let him wrap up the show and preview Tuesday's
I would also
show.
say the other big stock that I'm watching, and a few, Adam F., many others, are Regeneron. This is, again, back to biotech real quick. Regeneron, REGN, they got 3 drugs in the hopper this year, so we're looking forward to seeing any comments on any of those 3 drugs. Sarilumab, Dupilumab, and Praliant are the 3 that I'm watching at Regeneron. All right, looking forward to tomorrow's show. We've got Nick Shaheen because it's Tuesday, and that's what we do on Tuesdays. We talk to Nick Shaheen, so we're looking forward to that. That's it for us today, though. If you missed any part of our show, you can listen to the whole thing again on iTunes, SoundCloud, Stitcher, or YouTube. Just go to any of Benzinga's channels or the PreMarket Prep channels on those platforms. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. I hope everyone had a good weekend and has had a good start to your week so far. It'll be a busy week this week with conferences and we didn't even get to the auto show, but the auto show starts media days today. That starts tomorrow. So we got auto show, we got healthcare conferences, we got earnings on Friday. So busy week ahead. We're going to try to get to as much of it as we can going forward for the rest of the week. But hope everyone has a good day, and we'll be back with you folks tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.